Good evening, everyone. Futures Brizio here. It is straight up 8 o'clock on Wednesday, August 7th. Hope everybody's had a great week so far. Sorry I've been away. I know it seems like I say that all the time, but like I said, I'm not a content producer, as you clearly know. I'm a trader, and so YouTube is kind of a distant second from what I do, but I do try to get on here as regularly as I can and talk about what's going on and do some analysis, give you some not trading suggestions, but just talk about trading strategies and technical analysis, and I'll sprinkle in a little fundamental. But anyways, before we get started, make sure you smash the like button. Really appreciate that. Helps out the YouTube algorithm. And make sure that you subscribe to the channel if you're just finding it. And as always, any questions or comments, drop them down below, and I will respond to every single one. So let's just jump in. So what do you see on the chart? Well, this is a line chart, and I have made at least one video about line charts. Probably goes back several months now, but I did make one, but I wanted to revisit it because it's still something I like to do. I know the last many videos have been using the Heikin-Ashi Smooth, which I really do love too. But I probably use line charts as much as I use Heikin-Ashi Smooth, and I kind of go back and forth. My strategy is the same. It's just, how I visualize it is what's different. So I wanted to talk about this and a couple of trades I took today and why I took them based on using the line chart. So first of all, the red line you see there, the vertical line, just represent the start of today, or excuse me, of today or yesterday now actually, because we're into a new trading session now. So that represented like this time yesterday, okay, and then up to where we are right now, obviously. And so I took a couple of trades today. So let's just talk about the line chart. So I'm sure everybody knows, but just to review, what is a line chart? The line chart is just the closing price, okay, of any given time frame. So I'm on the 5-minute chart here. So this obviously, just like it would draw a new candle every 5 minutes, this just extends the line every 5 minutes. And it's only the closing price, which is why it comes out as a line, because it's the only data point that is being plotted on the chart. So you're not seeing the open, you're not seeing the high, and you're not seeing the low. You're only seeing the close. So unlike a candlestick or a bar or even a Heikin-Ashi candle, where there is an open, high, low, and close, this you're not going to see it. It's just the line chart. Now, there's good and bad to all these methodologies. So let's talk about the good part of a line chart. Much like Heikin-Ashi Smooth, it can really smooth out the price action, so you're not seeing all those candles, red, green, or in my case, purple, pink, and can really, with the wicks, it can really like mess up your analysis, give you analysis paralysis or overanalyzing or whatever. So because it's only showing you the closing price, it is very good at just kind of telling you the overall price direction, helping you spot major support or resistance areas, pullback areas, structure areas where price might reverse or price might continue, and things like that. Versus if you put on a candlestick chart, it just immediately becomes more noisy, right? Just becomes more noisy here, right? Now when you turn the line chart back on, it just quiets it down a little bit. And that's it. Now, what's the disadvantages? Well, the disadvantages, you're only seeing the closing price. So you're not seeing, especially when you're looking at structure areas or take profit, stop loss areas, basically, like I said, structure areas, and then places to enter and exit, stop losses, take profit zones. You're at a little bit of a disadvantage without seeing the wicks. You don't need the candles, but it helps to see the wicks. So if I was looking for an entry, I would just, basically turn on the candlesticks. Like when I pretty much have decided that there's a trade, I will turn on the candlesticks just to kind of look, and that helps me, again, set my entries and exits, and kind of gives me a little confirmation. But then I immediately go back to the line chart. And so that's what we had here. This was the trade I took on the ES today. And let's turn on the. So I was watching price as it went up here and made this new high. This was in the first half hour of the session. Let's see. Yeah, so 13:30. So this was the open on my broker, because it's 9:30 a.m. New York time, which is 13:30 on my. So this is where the market opened, and immediately went up. And then I started watching it because it went down, then it went up, then it went down, and then it started to go back up again. I was considering, okay, am I going to go long or am I going to go short here? Because now we were, a half hour into the market. Okay, so let's just talk about levels. Okay, well, first of all, we had this high put in as I was watching this, when I saw this come down. So there's the swing high, and then we had this low right here, okay, as this was going up, okay, and then we had price come down, make another swing right here. So I basically moved this up to here, although, conservatively you could have said, well, this is all internal structure, so let's just leave it here. Okay, and you can say this is your swing area, right? This was the last swing high, swing low that led to this high up here. Okay, so then the next thing I did is I turned on my line chart because I wanted to see up here what price was doing in terms of the highs, which again, you're only seeing the close, and the close could be the high. If price closes at the high of that candlestick, then the close price is the high price. But I wanted to see this. So you turn on the candlesticks, and you can see we hit all these wicks, and you can see. So your structure level is, something like this. I go back to the line chart, and so it looks like basically something like this. And so when I saw price go up here, and this is where the line chart's nice, because even though the wicks are up here, you can see what happened on the close. It's very plain to see that this put in a lower high right here. Now, obviously, yes, you can kind of see it on the regular candlesticks, but it's just more difficult. It's tougher on your eyes. I mean, you can't tell me that looking at this area is not easier than looking at this, okay? So clearly I can see on this close right here that price closed lower than here, and I knew we were throwing a bunch of wicks. So this clearly was an area the market was trying to sell from. So in that respect, as soon as, now I got in, it's a little bit early entry, but you think about it, yes, it's early, but it also has lower risk too. So as soon as I saw this little structure area right here, let me zoom in. As soon as I saw it, knowing that this thing failed to put in a new high and we threw all these wicks up here, as soon as price took out this little structure area right here, I went short. And you can see my entry right there, okay? And I just put my stop back above these swings, and if it turned and kept going through here, then obviously I was wrong and I'd want to be out of the trade anyways. Okay, now you could have waited until price took out this swing right here, which would have happened right here on this candle. It wouldn't have been that much further, but right about here, and the market did have a tiny little pullback, and then it went. But taking it up here after I saw the failed swing high and the wicks, and very easy to see on the line chart, I felt pretty comfortable about just going short right there. Again, put my stop, just above these highs that were formed up here on the wicks, and just leave it alone. And so that's what I did, and you can see the market came down here. This is where I exited. I did get back in again because I did feel it was going to keep going, and obviously I could have just held this, and this thing really has just kept going. So this is later in the session. These are the last couple hours of the session. Honestly, I could have just held this, but I didn't, and that's a learning experience for me because there never was any change in structure. So let's talk about on the way down here. So as price went down, so when we went down and made this low right here, okay, then the most recent structure point at that point basically becomes right here, okay. So we had a little pullback right here, all right, price pulled back, went down, so there's our swing. This becomes our new low. Now if you were not already in this trade, then you can see price pulled back. It never took out this high, and then started to go down. You could have, the ideal entry would have been to enter basically right below this little mini structure right here, okay. Then price goes down again, makes another low down here, okay, makes a swing high right here. Again, same exact entry. Price comes up. Obviously, this area way up here still is our kind of, drop dead swing high. Okay, so when price came up here and failed and started coming down again, all right, this structure right here would have been your entry. Boom. Now I got in once it broke out. So again, a little bit more conservative is that if it to wait for it to break this level right here, which is what I did. And the reason why is because on the higher time frame, the other reason why I got out right here is that this was if you can't see it on this chart, but if you look to the left on like an hourly time frame, this lined up with an area back in the past on the chart where I felt like price could have bounced off of pretty significantly. As it did, turns out it didn't. So when it didn't, then I started watching it again. I said, you know what, I may get back into this trade again, and that's what I did. And so again, price comes down. All right, it actually made a little structure low right here, but let's put it right here. Okay, all right, and then we can leave this one right here because this becomes our new low. And then price rallied through. Okay, but it never took out this bigger swing high up here. This one down here is just a minor little swing. All right, and even if you just said right here, even if you looked at this and said, well, I consider this a break, a change of character, and now this is going to go higher. Well, if you said that, then you'd be like, all right, well, I want to see price, break through here, come down, and then take out this retrace, and then take out the high and go long. Well, it never did that, and you can clearly see that on the line chart. It did come down and retest. The buyers did try to go higher, but you can see it failed. So this would have been your signal to go short right here anyways. But either way, the break of this structure level right here would have been your short. Okay, and then you can just see that just continued all the way down. Okay, once this structure got put in down here, this becomes your swing low. Okay, this becomes your swing high, and just so on and so forth. Okay, so now where do we stand currently? Well, we have this low put in, and this is real up to the market right now. So here we go right here. Okay, now I don't trade the evening session, so even if this sets up, I probably won't take it, but I'm just showing you. Here's our swing right now, right? Swing low. This was the last swing high before we made this low. Price is now pushing up. As long as this area holds, okay, then again, what I basically be looking for is price to do what it's doing now, come down. Let's say it comes down a little bit more, whatever, just so it's easy to see. And then it comes up. As long as it doesn't take out this little swing high it's making right now, assuming this turns out to be the swing high. I mean, it's happening as we are speaking. You can see the line moving. Okay, but if we see something like this, then I would expect price to break and go down and make another new low. Okay, so that just shows you kind of how this works. Conservatively, if you wanted to wait for a structure break lower, I suppose you could take a break of this little structure right here, or you could just wait for this main one down here to be broken. As soon as price breaks through here, you can wait for a pullback if you want. Because this is a 5-minute chart, I probably would just straight away just take a short right then, because you risk losing the trade, and honestly on a 5-minute chart your risk isn't going to be that much anyways in terms of the number of points you're taking. Obviously you have to position size properly for your account, but at least the number of points you'd be risking would be fairly limited, because you would just put your stop basically, just above this swing high and then just leave it alone. So, or at that point, if this breaks, then you could put your high above this swing right here. That would save you a couple more points. All right, but you can see how easy it is to see this on the way down. Okay, and even if we go back to earlier in the day, this was when the market, obviously this was last night. And you can see as price went up, you can very easily see the swing areas. Okay, now right here where price started going down like this, maybe this would have fooled you, but you still could have actually, even though I say it fooled you, you could have still traded this. So right here, we were going up, and then right here we break structure. We put in a lower high right here versus this high. You turn on the candlesticks, you can see we clearly put in a lower high. All right, and then we had a break of structure right here. You could have shorted this right here. Okay, the only thing is this would have been a pretty short-term trade, but you could have traded this all the way down. Okay, where would your exit have been? Well, this is where this trade probably would have not yielded you very much, because you were going down, down, down. Now, assuming you weren't too cool to rule and you just closed your trade right here, well, then you'd be waiting for a structure break. So you'd be waiting for price to take this area out, and if you waited for that, by the time this area broke, right? By the time this area broke, that you'd almost be back to your entry price. So that's why I'm saying this wouldn't have been, even though you technically could have traded it, unless you managed to get in right here and get out right here for a quick scalp. You probably wouldn't have made too much on this. But at the time, the price was trending up, so theoretically you're only looking for longs right here anyways. Why? Because the major swing low is down here. Okay, so if you want to just ignore all these in-between zones, you can just say this was the major swing. So we were in an uptrend anyway, so yes, you could have traded this, but yes, the fact of the matter is that the major swing low is down here, never came close to being broken. So as price came back up here, and actually this would have been your entry to go long again, because you can see what happened. We put in a low, went up, okay, so at this point we're trading down, so okay, fine, right, we're still heading down, then boom, right here we failed to put in a new low. Okay, we put in a higher low, you can clearly see it, okay, with a trend line. Okay, take that off, turn your candlesticks on, you can see we pretty much had equal lows, okay, on the candlesticks right here, but look how much easier it is to see on the line chart. And then this is your signal. When price breaks this little structure right here, or this structure here, that's your signal to continue the uptrend, and then that brings us back to what I was talking to before. And then when we finally did change direction, okay, it was because we had this swing right here. Okay, again, you could have had it here or here, anywhere right in here. All right, when this area was taken out, that signaled your change of direction. I was a little bit more aggressive on it because of what I saw up here, but theoretically, like I said, I could have waited, by structure level, I could have waited until price took out this structure and then gotten in right here instead of up here. But that just comes with a little bit of experience, and just knowing that how things look, about what's good and what's not. But theoretically, like I said, coming into the session, we were started in an uptrend, and that uptrend was not violated until we got way over here. Okay, even with this big pullback, again, remember the structure low, the swing low, the major swing low was way down here. So theoretically, unless price had come down and taken out this low, okay, and then maybe bounced a little back up, okay, then that would have been a signal to go long, to go short. But we never got that. Like I said, it never got close. It was in an uptrend the whole time. This was just kind of an elongated pullback, and then up we go. Okay, and again, we didn't change direction until we took out this structure. So you have to, when you're looking for, I would say, re-entry points in a trend, if you're going in the direction of the trend, these little minor structure areas are good places to target. Like I said, to go long back in this trend, you got this little structure area right here, or this one, those are fine. But if you're looking for change of direction and you want to just be very mechanical about it, then the change of direction trades have to occur when a major swing high or swing low are taken out. Okay, now let's say this had started to go up again and it failed. Of course it didn't, but let's say this started going up again, then it gets up to somewhere around here, and all of a sudden it starts to reverse and go back down from like this level, which again it didn't. But at that point you could have moved this line over to here, shorten this up. All right, this had become your swing. So as soon as this broke, right, as soon as it broke this area, all right, broke this swing right here, then that becomes your change of direction. Okay, and this is where, again, where I would turn on the candlesticks and say, okay, Where exactly is it? Okay, it's right there. So as soon as price took this area out, again, maybe I saw a little pullback, but I probably would just get in as soon as that closed. And especially if it was just looking like it was going straight down, I would just enter straight away, and just put my stop above the swing and just leave it alone. All right. So again, guys, if you're looking for a reversal trade, then I like to wait for the major swings to be broken. Okay, not these internal structures, right? But the major swings, and they stick out on the chart, like right here, right here, right here. Okay, these are all major swing points, right? Big move down, this becomes a swing right here, right? Major swing, right? They just kind of stick out. Now, the bigger and the more elongated they are, the obviously the clearer they are. But these little, overlapping, little choppy, these are not major swings. This is just noise on the way up, right? This is not anything, okay? We're talking about these big swings where price has an obvious pullback and you can clearly see it. Now, you might be able to use like a moving average to help. You would have to fine tune the moving average and, for the instrument and find one that kind of works, but you're never going to find one that's going to be exact, that's going to call that all the time. Say, okay, well, as long as this moving average holds the price, then it's just a pullback, okay? Or if it touches the moving average, that's a major pullback. That's a major swing. If it doesn't, then it's a minor swing, right? You can play around with it, but again, you're not going to find one that's going to work in every situation. But you could use a moving average. The other thing I've seen people use is things like the zigzag indicator. I'm not a big fan of the zigzag indicator because it repaints, meaning it will change on your chart as the price action changes. And so that can really mess you up because you might think you have a swing in place and you don't, or you do have a swing in place, but the zigzag doesn't show you because it repaints, because it's constantly recalculating what it feels are the swing areas, okay? Now, you can play around with the settings in it to make it more sensitive or less sensitive. But again, like anything else, there's not going to be any, perfect setting. Let me see. MetaTrader does not have a zigzag built in, but I think I do have a add-on indicator. Yeah, here's the zigzag right here. And, you can see right here. So this obviously, this would have given you a false swing for the re-entry right here, okay? And then maybe you would have thought, okay, well, price is going lower because the zigzag, says this was the swing and then price was breached right here, right? It breached it. And now maybe you think you're going lower, but you really weren't. So this is why the zigzag can give you some false signals. But it worked out pretty good right here. It worked out pretty good right here. You would have missed these back here, right? You would have missed this one, you would have missed this one, but it caught this one. So you can see, if I made it more sensitive, it would have probably caught these, but it would have really, but it might have messed you up and given you false signals on some of these other ones. So again, it's not perfect, but you could use something like a zigzag. So maybe this trade would have been a loss. But like I said, you can play around with the zigzag settings. These are the type of settings you have on it: depth, deviation, back step, and you can play around with these. The lower you make these numbers, the more sensitive. I change this, let's just, for a laugh, change this to 5. And you can see it just gets really crazy then, right? It does start to pick out some of the swings on these intermediate ones, but it just makes it really noisy. All right, so I don't want to get into a whole thing about the zigzag. You certainly can, look it up and play around with it if it's something you'd like to try. But the main setting on this is the depth. Change this back to 5. Let's change back step to 1. See if that does. Yeah, it doesn't really do anything. So the main setting really on this is the depth. And again, this is just, how this, all that just basically means is how sensitive the indicator. The bigger this number, the less sensitive it is. It's only going to show the major swings. But even at that, if we put it up to 15, okay, If I put it to 15, it does kind of call this one, but again, it looks perfect in hindsight, but you have to remember that this indicator repaints. So at some point while price was actually moving, it may have actually painted like a continuation right here. But then as price continued down, it recalculates itself and it drew it right here. So it looks perfect in hindsight, but in real market conditions, it's not that great. But you could try it, or you, like I said, you could try a moving average. But when you get good enough at looking at it, you can just kind of tell, and just use your own visuals to find the major swings, swing highs and swing lows. And hey, if you're wrong and you're a little overzealous and you don't call it, or you're wrong and you miss one and the price continues on without you, so be it, right? This is a 5-minute chart, and a trending market on a 5-minute chart, you're going to have plenty of places you can re-enter. I mean, if, like I said, I took this trade up here. If I didn't take it up here and I waited for this structure to be taken, then my entry would have just been down a little bit further. I would have missed out on this little piece. But I mean, look how much you could have gotten. Like, who cares, right? So, you can be very mechanical without using an indicator. All right. So, anyways, guys, that's pretty much what I wanted to show you. Again, like any other kind of trending strategy, this doesn't work well in kind of sideways, choppy markets. You really do need the market to trend. It doesn't have to be, a major trend. It kind of depends what time frame you're trading on. I mean, you could have great trends on a 5-minute chart and have the thing be sideways on an hourly chart. That's fine. And if you wanted to filter even more, you could just defer to your higher time frame for direction. So there was long trades here from here up to here. This obviously was a long trade, but if I go out to a higher time frame, let's say I step out to the hourly chart, okay, well, we were, kind of trading choppy up. And if I go to a 4-hour chart and I look at this market, well, I can tell this market is trending down and all of this was just corrective. So when you get down to the 5-minute, right, I gotta get back there now. You get back to the 5-minute, okay, all of this price action up, I could have just ignored. Say, you know what, this market is down. I'm going to wait for this thing to give me a short signal. And that short signal would have happened right here. You would have not traded any of this going up, and you would have just waited for, the 1 to 4 hour trend to continue. So that's yet another filter, right? If you, and again, this line chart's really, you go out to the 4 hour, you can clearly see this is a downtrend. We had all of this with barely any change, with these line charts going straight down, only two tiny little pullbacks in here. And you can see that this was clearly corrective. It's overlapping, it's choppy, it's slow going. Look how long it took it to get just up this little bit right here, okay? Look how long it took this. All right, so, but when you see this, and you can definitely see, well, hey, the market's trending down. So when you go to your 5-minute chart, you're like, well, I'm only going to look for short positions because the trend is down, and that's fine. So you can, that's another filter if you want to be more conservative. Go out to your 4-hour chart. Where's the trend on the 4 hour? If the 4 hour is down, then you just wait. You go to the 5-minute and you just wait, and you just wait, for that downtrend to continue. And unless the 4-hour chart downtrend is invalidated, then it's still in a downtrend and you're just going to wait, okay? And so, again, if you did that, you would have ignored all of this and you would have just entered at the break of this structure, and that's it. And you technically could still be in this trade right now. Now, before we wrap up, let's go back to where we were a little while ago, and let's update this. Okay, so here we are. We had these two swing points that I drew in a little while ago, and you can see now price has stepped, all right, and continued to step up. Now, we wouldn't have taken a short from here because we didn't break any structure. We had this little structure level down here that was not broke. Price went up, made another high, so there would not have been any trade. Okay, so now we're at a pretty interesting point. Okay, let me get rid of these blue arrows so you can see that. Okay, so you can see where we're at right now. So now if I was going to take a short, given again that we are in a downtrending market, I would look at this as a potential structure area to get into. Let's turn on the candlesticks for a sec, And there we are. So that's good where that line is. Okay. Now, if it takes this area out, well, then we might be changing direction. Again, I'm not going to take this trade no matter what, but we could potentially be changing direction because now we've taken out a swing. Okay, and if you were going to go long, then maybe a good place to trade it for in the short term would be back to this next swing high up here. You know, you could trade all this space in between here. But right now, let's turn the candlesticks on again. You can see this is acting as good resistance at this level. So if price holds this area, comes down now, especially now we're making another swing right here, I'd be looking right here now, okay, and potentially trading if price trades back below this low. Now that it's put in this low and it's trying to push higher, okay, as long as it holds this level, then this is still in a downtrend, okay. And again, you can see how easy it is to see this with the line chart. Very easy to see the swing areas, very easy to see the structure areas. You do need to turn on your candlesticks even just for a couple of seconds, just to make sure you're capturing the wicks and the actual highs and lows of the candles. All right, not just the closing price, but then you just quickly turn it off again, go back to your line chart, and then just wait. And you know, it's easy to set your, you know, so let's say this did turn from here and you wanted to go short, price starts to break down, it's going to go pretty fast. It would take out this structure and this one pretty quick. But whatever, you see you got in anywhere in here, I would put my stop just above here and that's it. And I just leave it. And if it goes up and breaks through here, fine, I get stopped out. It's a small loss. You know, again, you're on a 5-minute time frame. It's small from a point standpoint. You just control your risk, and that's all you got to do. So that's the line chart, guys. Pretty cool. Another way of trading. Again, takes a lot of the noise of the candlesticks off the chart. Just visually easier on the eyes. And again, for re-entry of trends, you can use the minor structure levels in between on pullbacks, but for reversal, if you're looking for a reversal trend or you're looking for a trend continuation from the higher time frame, like we talked about up here with the 4-hour trend being down, then you want your major swing points to be challenged, okay, before you enter, okay. But it also, like I said, depends how aggressive you are and how good you are at reading those swing points, and that just takes time. And again, you could try indicators like moving averages, try to play around with the setting to try to encapsulate, you know, catch those major swing areas, but leave the minor swing areas away from it. Or something like a zigzag indicator or something similar like that. But again, understanding that something like a zigzag is limited because it repaints itself. So, all right. So anyways, guys, I will leave it there. Again, questions, comments, leave them down below. And if you like the video, make sure you smash that like button on the way out. Subscribe to the channel. I hope it was helpful. And I look forward to talking to you guys tomorrow, hopefully. And we'll see if we can maybe do a pre-market review. If not, then if anything comes up, I can drop a video then. All right, guys, have a good rest of your night and talk to you soon.